Hello viewers, welcome back. So this is our second video as part of our series of video of the playlist Tally's Order Management module. In the last video, we quickly understood the fundamentals of order management. In this video also, we will cover the fundamentals of order management. Basically, we will understand the purchase cycle, the components of purchase cycle involved, and also we will see the sales cycle and the components of sales cycle, starting from order to payment in case of purchase cycle, or procurement to pay is what we normally call as an industrial term, or order to cash, or we also call as the sales cycle from the sale order to receipt of money. One thing we'll have to remember is that in Tally, once you create a company and if you are managing inventory, you will be actually maintaining the two sets of books of account. One is your accounting books of account and your inventory books of account. So it is essential for us to understand the voucher types that are impacting the accounting voucher and the voucher type those are impacting your inventory book. So this fundamental will give you a clarity on these concepts. So let us start with the concepts continuation. The purchase cycle or procurement cycle initiates with the purchase order. Step 1 is placing the purchase order. The PO includes the specified goods, the agreed rate, delivery timelines, and other terms and conditions. Step 2 is receipt of goods and recording the proof of goods received through a receipt note, or also known as GRN, goods receipt note. Step 3 is QC, quality control, and the rejection of goods in the event of defects or non-conformance with the PO. The rejection of goods is captured in the document titled Rejection Out. Step 4. Conduct a three-way match. A three-way match is A. Verifying the receipt of goods with the purchase order. B. Verifying the actual quantity received with the quantity in the purchase invoice with GRN or receipt note. C. Accounting for the purchase invoice upon authentication with the purchase order, GRN or receipt note, and the purchase invoice, which is generally referred to as a three-way match. Step 5. Post recording the purchase invoice. In case any further returns are effected, the goods are returned to the vendor and a document debit note is recorded to impact the inventory movement out and also reduce the liability of payment due to the vendors. Lastly, payment to the vendor is made in accordance with the agreed credit term. Based on the previous steps, we understood that the complete vouchers for this cycles are, again, just to remind you of the two sets of books mentioned in the introduction. The purchase order voucher is referred to as a non-accounting voucher. What does it mean? Once a purchase order is raised in TallyPrime, the data will not impact either the inventory book or the accounting book, but the data will provide reports on orders placed, goods received, partially or fully, and pending orders. The vouchers impacting inventory books are receipt note, rejection out, and partially debit note. Generally, debit note voucher type are known as integrated voucher type, as the transaction impacts the inventory and accounting book. The vouchers impacting accounting books are purchase invoice, again partially debit note impacts the accounting, and the payment voucher. The components of sales cycle or order to cash cycles are: A. Once the PO is received from the customer, you record it as a sale order. B. Based on the schedule, the goods are delivered. C. Accounting of rejection in prior to invoice accounting. D. Accounting of sales invoice. E. Accounting credit note. Post invoice accounting, where there will be an impact on the inventory book for material being received back and impacting the accounts book to the extent of the value of the goods being returned and thereby reducing the amount receivable. Finally, the receipt of money towards the outstanding bill. More or less, the purchase cycle components that we saw is replicated in the sales cycle or order to cash cycle, what you are seeing here. The vouchers demarcating the impact of inventory and accounts book. Here again, the credit note is an integrated voucher impacting both the books. Sale order, delivery note, and rejection in are pure inventory voucher. Again, a sale order is a non-accounting voucher as we understood in case of purchase order. We will get all the report related to order, but the data of the sale order will not impact the inventory book or the accounting book. A credit note is a integrated voucher type. Sales invoice and receipt voucher updates accounting books. I hope this would have given you clarity on purchase cycle, sales cycle, and also we understood the voucher type. Those are impacting the inventory books of accounts and accounting books of accounts. So in the next video onwards, we will start with configuring the order management in Tally, and also we will start with the basic order cycle based on the MSMEs starting from smaller organization, medium organization to larger organization. So thank you all once again for staying till the end. See you all in the next session. Thank you very much.